Quebec-based convenience store company Couche-Tard is surging today after it reported a drop in quarterly profit and revenue after market hours yesterday. For more on the results, let's go to Martin Landry at Stifel. He joins us to talk some more about this. Thanks for joining us today.
Good morning. Thanks for having me.
So revenue miss, but is it concerning to you?
Well, the most important number when you look at Couche-Tard is the merchandise same-store sales revenues in the U.S. That's the headline number that everybody looks at. And from that angle, there's some very positive news, right? The company has been generating a growth of 4.4%, the first time in more than 7 quarters. So I think that's what is pleasing investors this morning.
Okay, what about outside the U.S. number? What are you seeing?
Yeah, there's strong growth also in Canada and in Europe and other regions. In Canada, the same-store sales were up 4.1%, a very strong number that may not be sustainable. That was boosted by the ability to sell alcohol in the stores in Ontario. And in Europe, the growth was 3.8%, also very strong and may not be as sustainable as well, given some landscape changes for cigarettes in Netherlands.
They also talked about lower fuel prices, and that has affected them as well. Do you think that'll continue to be a problem for the company?
Well, fuel prices are a little bit out of the control of the company, and I think investors focus more on gasoline margins. And from that standpoint, we are about to cycle elevated gasoline margins in the past. Gasoline margins were a headwind of around 10 cents on a year-over-year basis. This 10% on a year-over-year basis this quarter. So if you would have normalized gas margins, your EPS would have been up 5% this year as opposed to down 6%. So that trend should be cycling in the coming quarters.
Okay, let's talk about Europe a little bit more. We talked about the U.S., but they're doing much better in Europe, better than they have in a few years. What led to that?
Well, in Europe, the company made a large acquisition, its largest acquisition in a long time, Total Energies, with stores in Belgium, Netherlands, and Germany. And the company mentioned that the synergies are ahead of expectations, which probably explains some of the outperformance on the bottom line.
Okay, so let's talk a little bit more about the gross margin erosion in Canada. You mentioned alcohol has done them well. What else have they seen as far as products on the shelf? Are there any other changes there?
So, gross margin, we looked at gross margin in the U.S. that went up 90 bips. And actually, the gross margin in the U.S. was the highest they've reported in the last 2 years. So, when you look at Couche-Tard, you got to remember the U.S. market is like 70% of their earnings. So there's a lot of focus on that market. So when we see like a strong or a positive same-store sales combined with a gross margin expansion, that is very healthy, and that's what we've been seeing in the U.S.
How did you think that the push to acquire 7-Eleven and then walking away from that affected this company? Because some are saying they seem to grow by mergers and acquisitions. It was a big one. They didn't get it. I mean, does that leave them in a poorer position or a better position?
Yeah. Well, it certainly was an overhang, right? When you look at Couche-Tard shares, they're down 8% year to date, significantly underperforming the market. And investors were a little concerned, right? This was the largest acquisition ever. It could have been the largest acquisition ever for the company. Was probably a little too big for most. And the management team didn't have a chance to explain really their strategy to investors in very detailed form. So that overhang now is removed. The company has walked away. We think that was the right move. 7-Eleven did not appear to be willing to transact. So now, without that overhang, the company will be able to buy back shares. They are authorized to buy back 10% of their float. They have started post-quarter. They bought back $400 million already. So we think that's going to support the stock. And when you look at the valuation at 15 times forward earnings, it is one turn lower than the historical average, and so in a relative market where we're at near record levels, we find the valuations very attractive.
Do you see more merger opportunities for them?
Yes, the company did say that their M&A pipeline is very healthy, and they did say it's healthy both in North America and in internationally as well. They are pointing to some smaller operators having some financial difficulties, so a lot of files coming their way because of that. And historically, Couche-Tard has been one of the best consolidator in Canada that we have, being able to extract a lot of synergies from their acquisitions and buying them at attractive valuations, and we think that continues on a go-forward basis.
So you have a buy rating, a price target of 81. Are there any other growth drivers you see factoring in to get there?
Well, one thing that the company has been talking about and starting to have some success is their food offering, right? Their food service is up 4.5% this quarter. And food is a great offset to the tobacco category that's flat to down. So it will be the recipe of success for the company. They announced a partnership, a collaboration with Guy Fieri this morning. They're launching 11 SKUs in 10 states with the potential to grow that nationally. So they seem to be on the right track. Their meal bundles is offering a lot of value to customers and getting a lot of traction.
Martin Landry, I do have to leave it there. Martin is the Managing Director of Consumer Products and Merchandising Equity Research at Stifel. Thanks for joining us.